Did you know that your interest rate is always negotiable? If you'll watch this video and listen to the recommendations, you can save between 1 and 1.5% on your APR when you qualify for a loan. Definitely stay tuned to the end because I'm saving my best advice for last. And a little hint for you, it does involve you getting the property under contract first, but it's incredibly valuable. So I'm recording this video at the beginning of 2026, actually spring of 2026. Right now, Freddie Mac's 30-year fixed mortgage is roughly 6.3%, but I never take APRs at face value. I'm always going to try to get the best one possible. The less you pay in interest, the more money that goes into your pocket or into the equity on the home. So definitely stay tuned for this. Like I said previously, the spread on a loan can go from 1 to 1.5% in either direction. Okay. The worst thing you want is that high interest rate, and the best thing you want is that low interest rate. So I'm going to tell you a few things that you've probably heard before, but first and foremost, you are actually going to be given this credit score based on who you are, typically, not just what's going on in the market. So please be aware that your credit score really, really matters. So the higher your credit score, the less likely you are to get a high interest rate because you're less of a risk to the lender. The lenders want to lend to people that they know are going to pay them back. And that's what the credit score says, is this person pays their bills. Lenders like to lend to people who pay their bills. So the higher the credit score that you can get before you even apply for a loan, the more likely you're going to get a lower APR. You're going to be seen as a lower risk. Okay. So keep this in mind. There are some very basic things that you can do in order to raise your credit score. And you can do these very quickly. As a licensed agent with Remax, I've seen so many people have all these loans out there, like credit card debt and different car payment, whatever. And then you look at their financials and they have the cash in their bank account. Okay. So if you have credit card debt, especially, or any just small loans, like anything small, pay it off before you even apply for a loan. If you can do that, that's going to raise your credit score multiple points because it's going to show that you have less and less debt. I do understand that it's going to drop your cash, but typically the lenders don't like to see that you have 800 different payments. So if you have 12,000 in cash and $8,000 in payments, $8,000 in small loans out there, I would go ahead and pay them off, try to get a little bit more cash going, but like that does help the lender out if you have a lot less payments, you owe less money. The other thing lenders like to see is unused credit. So if you have credit cards with nothing sitting on them, but let's say you have a $5,000 or $25,000 line with that credit card, like your max spend would be say $20,000, that shows that you have $20,000 of unused credit. That's actually going to boost your credit score and it's going to help you get a lower APR. So keep in mind that it's really important before you even apply for a loan, check your credit score. What is on it? What on there can you get rid of? The other thing you want to check is, are you current with payments? If you're not current with some of your payments, that really could be a problem. And when the banks see that, I see it too as a property manager, it's all these red boxes. Nobody wants to see that. So if you can get caught up and just get that all in the green, that just makes you look a whole lot better to the lender. The other thing that can really, really help you in getting a better rate is being willing to put more money down. Again, all the lender cares about is risk. The lower risk you are, the lower the APR you receive. So if you're able to do 10 or 20% down, even 25 or 30% down, the lender loves this. They go, oh, he's putting himself on the line here. He's putting his money in. So I feel very comfortable lending him my money. Okay. So if you can do a higher down payment, you definitely want to do the math on this. Real estate is really about math, and look it up. If I put more cash in, but I can get a point off of my interest rate, that can save you $50,000 to $100,000 over the life of that loan. That's probably very much worth doing. Okay. So just keep that in mind. What they consider as higher risk, what can you do to bring that level down? Because ultimately you want to win with a lower APR. The next thing is the debt to income ratio. Okay. I already kind of covered this. The less debt that you have, the better this ratio. So if you owe $100,000, but you earn $100,000, that makes the bank a little scared. Okay. They don't want to see that all of your income is going to payments. If you can show that only a small portion of your income is going to payments and you have plenty of room left there to make the payment on the house that you want to buy, the lender is going to really be fine with that. Okay. They want to see that you have that bandwidth. Let's say you're going to apply for a home loan and the loan would be $2,000. You only have $1,800 left at the end of every month based on your payments. That's a bad sign. You're probably going to be declined for that loan. And if you have just a little bit left over each month, once you pay the loan payment, they're probably going to charge you a higher interest rate, like I said, because they see you as a risk. So just keep in mind, if you can think how the bank thinks before you even walk in the door, you can walk in prepared. They're going to resonate with all of the things that you've done to raise your credit score, lower your debt to income, and they're going to give you a really good rate. So that's really important. So the next thing I want to tell you is that when you become really, really valuable to the lender is when you're already under contract. So to get under contract on a house, you are going to get a pre-approval letter. You can go to any banker that you want. And I always recommend going with someone you know. If you have all of your money at a bank and they have a few of your loans, they already know you pretty well, that's probably the best place to start. Just start with that relationship and say, hey, I want to get a new house. I'm going to move. I'll sell my other house, or maybe you're buying an investment property. So tell them what's going on and see what they'll approve you, okay, up to. So they're going to give you a number up to X, and they'll say you can buy a house up to this rate. And they're also going to quote, they're going to pull your credit and also quote you a rate at that time. Okay. Just know that that's just a suggestion. That's just a pre-qualification letter. The bank is not stuck. They're not guaranteeing anything. They're just letting the seller know that you probably can afford the loan. Okay. You're not really going to get qualified until you're under contract and you have, all this paperwork in. So just be aware of that. But use that letter, get yourself under contract on a property. Okay. The next step to saving you the most money is to now shop the loan around. Once you have that contract in hand, signed by all parties, the banks know you are serious. You're looking, okay? And I really recommend that you do this step week one. Typically, the first week of the closing process is when you're in the due diligence period. And at least here in Georgia, you can walk for any reason during that due diligence period. Now, hopefully the property that you offered on, it works under the current terms. That's really important. I wouldn't encourage you to go under contract if you know it won't cash flow based on your APR that you were quoted initially. But hopefully it works. You just want a better deal. That's what I typically see. So once you're under contract, you already have a pre-qualification from Bank A. You most likely know, like, and trust them already. Keep them on the list. That's great. But take that contract and shop it around. By now, you know your credit score. You know how much you're under contract for. You know what you want. Okay. Know that you can get 1 to 1.5% off, or maybe they'll buy it down the rate for you. There are all different ways a lender can do it. They'll come up with those ways. So call 2 to 3 to 4 banks. If you don't know any others, ask your agent. Your agent typically has a ton of relationship with banks. Licensed real estate agents cannot profit from this. Okay. We cannot monetarily get a kickback by recommending lenders. So if they give you a lender, it's most likely someone that's licensed. They're excellent. They're going to close. I would never give a buyer of mine a lender that's awful. Like, you want the process to go well for everyone. So ask the agent if you don't have a list. I also have a list of great lenders on team912.com. They do work nationally, but anyway, who you use, it doesn't matter. Send every one of those lenders that contract and tell them, this is my name, this is my credit score, this is my income, this is my debt to income ratio. If you know it, if you don't, that's okay. But when you tell them initially that you know your stuff, you're already under contract, and you're looking for the absolute best rate possible, that lender is going to jump for your business, especially like right now in 2026. We have low transaction volume, okay? Lenders only get paid if they write new loans. They love those fees, they love the interest. So be aware that once you're under contract, you're quite an asset to that bank. So when they see your qualifications, you came in prepared, you're ready to go, you only have a few days to figure this out, because you have got to get the appraisal going, you've got to get your loan documents in. But take that week and shop it around. I have seen clients of mine save a lot of money by shopping that loan around. Now, a lot of times they end up back with the original bank, and that's okay. Okay, you already like them, you probably want to work with them. And just understand that you're not being rude, you're not doing anything wrong by shopping that rate around. So if you get Bank B to give you a better rate or better terms, or maybe they give you less closing costs, like whatever that is, do the math, okay? It's all a math equation. Go back to Bank A, go back to Bank C, and say, hey, Bank B gave me a better deal. Can you meet or beat these terms? And at that point, when you kind of let them all know, like, I have this, I have that, someone quotes you something, it should always be in writing. Just because they tell you over the phone that they'll do a 3% interest rate, I would not trust that. Say, thank you, Bank A. Can you send me a letter with this information? Now that you have that paperwork, send it to the other guys, okay? That is a proven document that is going to work them into a tizzy. Hopefully, you can work with a guy you want to work with for the the lowest APR possible. I really hope this video is helpful. It is so important to save money when you're buying real estate. You can't always take it off the sales price. You can't always help the repairs, but one thing you can always work on is getting a better APR for your loan. I hope this is helpful. If you're interested in buying in Savannah, Georgia, or nationwide looking for real estate investments, we are here with Team 912, but I truly hope this is helpful to you and I hope you get the best rate possible. Stay tuned to this channel for more. I'm always here to educate you. Have a great one. Cash flow Savannah, where the dreamers dwell. Get your hustle on, ring that wealth bell.